2 weeks after a big hike in fuel prices, Prime Minister Narendra Modi tears into opposition-ruled states, saying they are hurting consumers by not reducing fuel taxes, asks them to relieve the price pressure.
पिछले नवंबर में जो करना था, 6 महीने डिले हो चुका है। अब भी आप अपने राज्य के नागरिकों को वैट कम करके इसका बेनिफिट पहुंचाइए।
India's biggest ever IPO opens on May 4th. LIC defends reducing its mega IPO size from 60,000 crores to 21,000 crore rupees. Says it was due to the war in Ukraine and investor appetite. Our experts tell you whether the share will be a good buy or not. Sensex stumbles over 500 points after a choppy session. Nifty ends below 17,100. Reliance market cap hits 19 lakh crore rupees. Adani Power continues its winning streak, hits upper circuit in trade. Hindustan Unilever Q4 beats estimates despite inflation. Net profit rises 8% to 2,327 crore rupees. FMCG major sales jumped 10%. However, margins and volumes suffered in Q4. Tata Group begins its consolidation in the aviation space. Air India to buy entire stake in AirAsia India. No word on synergies with Air Vistara as yet. As reported by us yesterday, the nation's largest ever IPO will hit the market exactly a week from now on the 4th of May. Formally announcing the 21,000 crore rupee public issue this morning, LIC blamed the war in Ukraine and market appetite for the reduction in the IPO amount from an expected 60,000 crores to 21,000 crore rupees. The company will also be divesting its stake in IDBI Bank as required by the regulator. Let's listen in to what the LIC chairman had to say.
As all of you know, and you've been also articulating it, 65-70,000 crore was what was talked about initially. But because of the situation, it was not possible to go ahead with that kind of number one. Number two, if you're looking at the multiple, maybe in Indian markets, Indian insurance companies, others listed companies have that kind of multiple. But if you look at the size of the corporation and the fact that if we compare ourselves with the biggest ones in China, maybe typically the Chinese companies, the government Chinese company also has around 0.7 to 1.1. So I think ultimately it boiled down to that. Even in this condition, where most IPOs are put on the back burner, we are going ahead with it. And that strength comes from the fact that we know the market. We've been investment managers for decades now. We know how things pan out. And we believe we have the confidence that this can happen. Things being what they are, they're a little unpredictable. So even if we had to wait, how long would we wait was the question. So at some point we felt it's not pointless to wait too long. And let's go ahead with this. Even though year on year we must have lost a bit of market share, we have regained it in the month of Feb and March. In fact, our growth in premiums were the highest in the industry, both in the month of February. March was substantially good at around 50% growth. So I mean, the point that I want to make is that we have for long been holding on market share. We have also regained market share in some months. So this is something ebb and flow, and it will continue to happen. Share price will probably depend a lot more on the way we perform and the way we grow, and what kind of shareholder value we create, even with this 3.5%. Once we're able to do that, I don't think there'll be any problem in further dilution later on.
Dhirendra Kumar now joining us. Dhirendra, tell us, it was meant to be the biggest IPO in terms of, market cap. Of course, it's reduced in size, but much anticipated. Would you advise buying into the LIC IPO?
In the market, you'd never miss out on something substantial. And even if you are lucky with the allotment, then, it's not a make or break situation. Because if it's a great company which should be held for 10 years, you should be buying it even after that, because in the IPO, you will get a defined quantity. But let's look at, what LIC is. It's a big company. When I look at it, I have been looking at mutual fund industry. And this one company is bigger than, 1.5 times or maybe about 1.8 times than the Indian mutual total assets managed by Indian mutual funds. Yes. So this is more than an industry. This used to be the monopoly, and this now it is still 68% of the life insurance business in the country. When I look at the complexion of the business, it has a lot of legacy issue in terms of the kind of policy it sells, how rewarding it is for investors. But let's look at some very basic things. It's a large company, profitable company being sold at a price which is close to its embedded value, which is the yardstick used by insurance companies to sell. So it might be cheap, or it may be relatively cheap, or it might be attractive. But don't rush, simply because there are just too many unknowns. One is that, I generally dislike government-owned companies. Government happens to be a very bad owner. And we have seen it time and again. But in this case, it is little different. This being an insurance company, trust is one of the critical capital of such a company. And government being the owner turns out to be a great plus. So in that sense, that is the advantage. The other is that this is not only a government company, it has promised to remain a government-owned company for all times to come, despite the public issues. So, and gradual disinvestment. So in that sense, and it's going to be very different from other insurance companies. Let's look at 4 or 5 good things about this company. It's big, unhindered, unfettered trust, a sizable scale. Also, there might be lot of latent value in many of its assets simply because of its legacy. Now, about the disadvantage, I think this is a company which sells policies. When I look at it from a consumer point of view, I think LIC is a very bad choice. And my belief is that if something is not great for the consumer, it will be a very big negative. It will be a long-term disadvantage for the company. So it entirely depends on how quickly it is able to change. And because when I look at the complexion, when I look at the endowment policy, the scale of endowment policy, or the total assets under management, the scale of annuity and life and, term insurance, which should be the core of an insurance company, it is not meaningful. It is not good enough. So in that sense, investors or, the policy holders will be disappointed. So it might look, there are things which might tilt the deal towards LIC, that it is attractive, it is large, it is big and all that. But on the balance, I think, give it some time, let it establish in the public domain. And then I don't think investors are going to miss out if it's a great opportunity.
All right, Dhirendra, thanks so much for joining us. Questions around whether or not LIC does really remain attractive given the kind of diminished size of the issue, as well as the fact that it has some pretty tough competition. Now, bears gripped the Lal Street after a one-day pause as investors were hit by sour global cues. Investors lost 2.5 lakh crore rupees today in trade. Volatile session, Sensex tumbling 500 points to end below 57,000, Nifty barely holding on to 17,000. Sharp reaction to March quarter earnings, COVID resurgence, weak global growth outlook due to war in Ukraine, and lingering Fed rate hike concerns, all hurting investor sentiment. It was big boy Reliance, which continued to go from strength to strength. Reliance added another feather in its cap, becoming the first Indian firm to cross 19 lakh crore market cap. Rising gross refining margins helped Reliance Industries achieve that feat. All major sectors ended in negative territory. Bajaj Twins, Tata Consumer, Shree Cement and Adani Ports, some of the biggest blue chip drags in trade today. HDFC Life Insurance posted a healthy set of numbers. Profit jumped 12% in the fourth quarter. The company expects to double its value of new businesses over the next 4 years. Listen in to Vibha Padalkar on growth outlook and COVID impact on earnings.
It's been a good quarter again. So congratulations to you for that. Help us with some of the details and some key highlights that you've noted, especially in terms of growth, in terms of specific verticals in this quarter.
Yeah, so thank you for having me here. Overall, if you were to look at all our channels, we registered a growth resulting in overall growth that we see of about 6% growth. Last year, we grew by 40%. So there was a base effect. But total AP growth was 8%. This is including group. We were very much in line with industry growth against this coming out of the pandemic. Our market share continued to be fairly strong and being able to hold our market share both in the individual space and in the overall, including LIC. Our distribution channels continued to be diversified, and each one of our channels tracked good growth. Also, some of our key focus areas like annuity business continued to trend well. Our quality of business, so persistency, 13-month persistency was held at about 87%, 61st month persistency at 54%. During the quarter, our assets under management crossed the watermark of 2 lakh crore. So that again was a milestone for us. Yeah. And we ended with all of this as profit after tax, showing a fairly robust growth of 12%. Again, if you remember, first couple of quarters for the sector, we were snowed under with COVID claims. So really coming out of that and having a fairly robust quarter is how we ended.
The Prime Minister has breathed fire at opposition states over fuel prices. Reacting for the first time on the rising prices of fuel, Prime Minister Modi accused the opposition states of not reducing VAT. The Prime Minister nudged states to cooperate in the names of federalism. Listen in to what he said.
आपसे मेरी प्रार्थना है कि देश हित में आप पिछले नवंबर में जो करना था 6 महीने डिले हो चुका है, अब भी आप अपने राज्य के नागरिकों को वैट कम करके इसका बेनिफिट पहुंचाइए। पिछले 6 महीने में क्या हुआ है, आज चेन्नई में, तमिलनाडु में पेट्रोल करीब 111 रुपया के पास है, जयपुर में 118 से भी ज्यादा है, हैदराबाद में 119 से ज्यादा है, कोलकाता में 115 से ज्यादा है, मुंबई में 120 से ज्यादा है। और जिन्होंने कटौती की, मुंबई के ही बगल में दीव दमन में 102 रुपया है, मुंबई में 120, बगल में दीव दमन में 102 रुपया। अब कोलकाता में 115, लखनऊ में 105, हैदराबाद में 120 करीब, जम्मू में 106, जयपुर में 118, गुवाहाटी में 105, गुड़गांव में 105 है, देहरादून छोटा राज्य हमारा उत्तराखंड 103 रुपया है। मैं आपसे आग्रह करता हूं कि आप 6 महीने भले जो कुछ भी आपका रेवेन्यू बढ़ा आपके राज्य के काम आएगा, लेकिन अब पूरे देश में आप सहयोग कीजिए, ये मेरी आपको विशेष प्रार्थना है आज।
The Tatas have begun the task of consolidating their airlines business through a proposed merger of Air Asia India and Air India. Air India has proposed to acquire 100% equity of Air Asia India, and Air India has sought Competition Commission of India's nod for the merger. The Tatas have assured the CCI that the move would not lead to a change in the competitive landscape in India. Tatas already hold 83.6% stake in Air Asia, and the Tata Group is working on a plan to move all their aviation assets under one roof. Plans are afoot to move the entities together into a complex in Gurugram in a phased manner. Let's take a very quick break. When we come back, our special segment, Ask Udain.
Story goes like this. Elon Musk, who has a major following on Twitter, was not too happy with the way Twitter was policing its users with, free speech being impacted. That's what he felt. So what he decides to do is buy Twitter. And that's what he's done. He's bought Twitter for $44 billion. But the bigger question now is this: what will Elon Musk's version of Twitter be like? So the deal is expected to be completed by the end of 2022. Twitter, which is essentially a publicly listed company, will now be a completely privately owned company owned by, of course, Elon Musk. As far as Musk's plan is concerned, he wants to turn Twitter into a platform where everyone can debate and say things without risking censorship or blocking. Although previously he did qualify that by free speech he meant everything that was legal. Because in the past, this concept of free speech has actually enabled people to spread misinformation, false news, fake news, abuse, and a lot of hatred as well. Now, it is a well-known fact that Twitter as a platform has millions of bot accounts. And bot accounts doesn't mean purchased accounts. Bot basically means BOT, bot accounts, which are essentially fake accounts. Elon Musk has suggested that using his advanced AI techniques, he'll be able to identify these bot accounts and rid Twitter of this whole concept of fake accounts. The challenge, however, would be to differentiate between real bots and Twitter users who act like bots. Under Elon Musk's reign, almost all users on Twitter will be able to get that blue tick, which each one really craves for. And the reason is that apart from identifying these bot accounts, Elon Musk plans to give that blue tick to every human user on Twitter. Elon Musk also wants to focus a lot on transparency with Twitter users. Basically, he wants to explain to people how Twitter differentiates and how Twitter spreads content to its users. Why some tweets will be able to reach out to a lot of people and then the reach of some tweets is much lesser. What are the factors which determine the visibility of different content on Twitter? He wants those codes to be out there for everyone to see.
When it's the world's biggest news story, there's only one gold standard of journalism.
You are watching.
Hello and welcome. You're with us here on Ask Udayan, the show where we answer all your stock market related queries with our global business editor, Udayan Mukherjee. Let's bring you the number on your screen once again, just to remind you. And you can simply send in a text or a video on our WhatsApp, and we will take a few of those queries every Wednesday. Here's our first viewer query today. Our first question is from Tanveer Mistry of Ratnagiri, and this one's on Thermax.
This is Tanveer Mistry from Ratnagiri. Thermax has recently touched a 52-week high. I have purchased it at around 850 to 900 level about 2 years back. Is there further chance for appreciation, or is it a good time to exit from the stock?
No, I would not recommend a very hasty exit from Thermax. You've made a lot of money on that company over the last couple of years, and the stock has actually gone up some 65% in the last 1 year. So it's in a bit of a tear. But I think there's a good reason for it, because this is a classic example of a company which is reinventing itself completely. You know, Thermax used to be a boring boiler maker. But unlike BHEL, which is still stuck to thermal power as its main client group, and thermal power is not growing as an industry, and therefore the demand for boilers is not growing, Thermax has cleverly tried to orchestrate a complete turnaround of its business strategy by focusing on clean water, clean air, and clean energy. I mean, that is what the company is trying to do now, and it's no longer a boring boiler maker. And if you look at some of these new initiatives that they're doing, which is the waste to heat recovery plants, enormous possibility going forward. I think in a sense it's a clean energy play now. And that's what the market is quite excited about, because it has always been a good management and a good company. But now with the focus on clean fuels or clean energy and water and air as its thrust area, I think the possibilities of growth have gone up multifold, and you can already see it in the recent numbers for Thermax. The only problem is that, as you said correctly, the stock has gone up quite a lot. It's no longer at 900, it's at 2200. So given that the market is going through a turbulent phase and that the stock is already trading at a P multiple of 45, you might see periods of pullback in Thermax. You should be prepared for that, because it's no longer a cheap stock. But I think otherwise, for a 3 to 5 year kind of horizon, given what the management is trying to do, the bigger rewards probably lie in remaining invested, having gotten at such a good price point for you.
All right, Manish Sharma has written in from Jamnagar and he holds Infosys, so very topical at that. Let's hear out really where he's at with his investment.
Hi Udain, I'm a big fan of you. I want to know about Infosys. I have bought 100 shares at the rate 1322. Should I hold or exit? Thank you.
Well, your price is good, entry price, and you're not in losses like a lot of recent investors in Infosys may be, because the stock has corrected quite a bit. I think this current earnings communication has created a little bit of discomfort among investors about whether the IT story is still good for the next 1 or 2 years, or should one be booking profits and checking out of that sector. Because one thing is clear, attrition is a major problem for the sector right now, and margins are coming under pressure, therefore, because the wage hikes will have to be much more aggressive going forward. Infosys's EBIT margin guidance of 21 to 23% for next year is also lower than expectations. And given that the entire sector, and Infosys particularly, saw such a big valuation expansion, the stocks which used to trade at 20p multiple went up to 32, 33p multiple over this period of 12, 18 months. That kind of valuation expansion needs constant earnings upgrades to justify itself, and that has not come through this time around from Infosys. In fact, most brokerages would have cut earnings estimates by 5 to 7% after the current quarter. So you can sense what is going on, but I think the stock has corrected quite a bit from 1900 to 1500 and between 15 and 1600. And if this correction continues, very soon, it's not there yet, you will find the stock when it comes to say 1400, 1450 levels. If it does that, another 100 rupees from here, the stock will be trading at 20 times FY24 earnings. And that, I think, given the quality of the management and the business, is not a bad price point to be looking at that stock again. So I understand the current nervousness, but after the recent correction, I think it will soon be approaching attractive levels, and I wouldn't advocate you to panic about Infosys now.
Okay, CR Pagaria has a query on VGuard. He writes in from Bangalore.
I have 1,000 shares of VGuard at an average purchase price of rupees 240. Please suggest me, can I hold for 2 years?
Well, you could, but don't expect the stock to be a rocket. Your acquisition price is 240, which is on the higher side. We are a little bit below that, but it's not as scary as last month when the stock plunged to 182, if I'm not mistaken. I mean, that would have been scary for you. But the stock might consolidate for a while, but I don't think you will make a lot of money in the next couple of years from your acquisition price of 240. Sorry about saying that, because the problem with VGuard is that its core business, or its largest business, which is stabilizers, is no longer a segment which is growing very fast, because the quality of power in India has improved such a lot that at some point all of us had stabilizers in our homes. But these days the need for a stabilizer has gone down significantly. VGuard knows that, and therefore it is trying to get into consumer durables, consumer appliances, consumer electronics, kitchen appliances, because those are A, high margin businesses, and B, they're not quite the boring flat business of stabilizers. But the problem is that it has got low margins in the appliances business, and when you go out to a shop, you can identify with brands like Havells or Crompton, but VGuard in the appliances segment is not such a high recall brand yet. Maybe they will get there. So if you have to buy consumer electronics or appliances, I think the better stocks could still be Havells or Crompton consumer rather than VGuard. So it'll probably need some more time to get entrenched in the electronics business, and therefore I would say that the stock will probably just about amble along from your purchase price and not generate very high returns over the next couple of years. I could be wrong, but that's my assessment.
Kalpesh Kacharia has a query. Now Kalpesh is from Surat and he has a query on Deepak Nitrite. Let's listen it.
Hi Udayan sir, I am Kalpesh Kacharia from Surat. I am holding Deepak Nitrite share at the rate 1500. Should I hold or exit? And if the dollar go up, so it's a negative impact upon the chemical sector. So now what is the view upon Deepak Nitrite? should I hold or exit, or can I buy more if fall down correction?
Well, Deepak Nitrite is a good company, as you well know, and you bought it earlier. The stock doubled from your acquisition price to 3,000, and then it took such a big 40% correction all the way down to 1,800. It's no longer there. It's bounced back since, but nowhere close to that peak of 3,000. I think you will need to be patient with Deepak Nitrite right now, because the thing to understand is that it had a very good phase when its core business, phenol, which is more than half of its revenues, was doing very well. But my sense is that phenol, that story has peaked. Prices have peaked in phenol, and I don't think Deepak Nitrite will make a lot of money from that business. It's still a good company. It understands that phenol is cyclical, and maybe the cyclical peak is behind it, or we are quite there yet. And therefore, for Deepak Nitrite to go back to 3,000 and to go higher from there, what needs to happen is that the share of specialty and fine chemicals in their overall portfolio has to go higher. Now they are doing capex aggressively, and I think they are cognizant of the fact that they need to up their ratio of fine chemicals so that the margin profile increases and they can reduce the volatility which comes from phenol being such a large part of their business. This will take some time, particularly because this is a stock which has gone up 15 times in the last 5 years, and that too after such a big correction. So this has been a multi-bagger, but having been such a multi-bagger, I think now it needs to consolidate, and this is the process of consolidation that you're witnessing at this point in time. So for longer term investors, they should not get too pessimistic, but I think they will now need to realign themselves for less spectacular returns that they've got used to from Deepak Nitrite, at least for the next couple of years, till that capex comes through and more specialty chemicals flow through to their revenue stream. So I would not despair, but I would temper my stock return expectations from what one has seen in the past and what one needs to align oneself to for the next couple of years at least.
And that's all we have the time for on the show today. Udayan, thanks so much for answering all of those queries from across the country, and we'll take a few more viewer queries every week right here on Ask Udayan. Do keep them coming in on the number on your screen.